Welcome to Beyond Just Money by Kalkine Media, an independent global media house and investor relations group. Please note that this podcast is for information purposes only. It's not a solicitation or recommendation to buy, sell, or hold the stocks of any company or companies or engage in any investment activity under discussion. Kalkine Media is neither licensed nor qualified to provide investment advice through this platform.
Welcome to Beyond Just Money with me, Samta, and today we have the head of content of Kalkine Media, Nidhi Sinha, with us. So today we will be talking about something that often confuses investors, which is the difference between TSE and TSX. And to help us resolve our confusion, we have Nidhi, like I said. Welcome, Nidhi.
Thanks, Samta. It is actually very important to look at this topic from the point of view of the investors.
Well, absolutely. In fact, if we see the Toronto Stock Exchange, it is the largest securities trading platform in Canada and the third largest in North America, as we know. But investors swear by the indices listed on this exchange, primarily the Snp or the TSX Composite Index, which is country's benchmark index. So will you please throw light on what is the difference between TSE and TSX for our listeners today?
So when we talk about exchanges in Canada, first comes the TSE or the Toronto Stock Exchange. It was first set up in 1852, and that time it was a mere association of brokers with no official transaction records as such. However, in about a decade or so, the TSE was formally created, albeit with meager trading volumes and a handful of listed securities. The Toronto Stock Exchange Inc., incorporated in 1878, then launched its Toronto Stock Exchange 300 Composite Index about a century later in 1977, as by then trading in securities caught pace with a maturing Canadian market. With the gradual deepening of the Canadian stock market, the TSE 300 Composite Index evolved to better encapsulate the growth trends in the domestic economy as the number of listed entities and volumes rose manyfold. If we look at the numbers, according to the stock exchange, the total volume of shares traded on TSE reached about 3.3 billion in 1980. Which was, a combined value of about Canadian dollars 29.5 billion. The exchange accounted for about 80% equities trading in the country at that time. The TSE was later categorized to solely allow trading in senior equities from 1991, while the other exchanges in Canada handled trading derivatives and junior equities. These trades were then handed over to the Montreal Exchange and the Canadian Venture Exchange. Now let's talk about the Snp Tsx Composite Index to, understand the difference also. So the evolution of TSE into TSX is quite an interesting one. In April 2002, the Toronto Stock Exchange Inc. basically rebranded itself to adopt the acronym TSX. The Toronto Stock Exchange, managed by the trading business entity of the TSX Group Inc., simultaneously rebranded its benchmark TSE 300 Composite Index in May 2002. The company then handed over the management of the index to the New York-based Standard & Poor's to form the Snp TSX Composite Index as we know it now. The index at this stage comprised of 250 companies instead of the earlier 300. The TSX Group also acquired the junior equities trading platform, which is Canadian Venture Exchange, around the same time. This change in ownership triggered the renaming of the Canadian Venture Exchanges Index, Snp CDNX Index, to Snp TSX Venture Index in 2002, by which name we all know it now. However, the TSX or the Toronto Stock Exchange as we know it today is currently managed by the TMX Group.
Well, that's great. And what happened in the next stage of transition?
The next level of transition, is quite interesting. The TSX Group gradually expanded its operations to consolidate all securities trading in Canada and brought them under the TSX markets. It also filed for a public listing in late 2002 and started trading in October 2002. However, at this stage, to further expand its operations, the country's largest securities trading corporation signed an agreement with the Montreal Exchange, which is categorized for derivatives trading, to merge the two organizations. This merger then led to the creation of the TMX Group as we know today. Being one of the largest of equity marketplaces in Canada, the TMX Group has further subsidiaries, including TMX Markets, the Canadian Derivatives Clearing Corporation, TMX Data Links, TMX Insights, and TMX Money, among many others. These companies offer several services, including data, analytics, clearing services, and an equities trading platform. As a part of its trading business offerings, the TMX Group also has several sector and market cap based indices to provide a better insight into the country's equities market. The TMX Money platform, which we mentioned earlier, also provides market related information on US securities.
Well, that's interesting. Can you throw some light on the Canadian benchmark index for our listeners?
Well, the Canadian benchmark index, which is Snp Tsx Composite Index, is one of the largest in North America, and it comprises 229 largest Canadian listed companies. Moreover, it represents about 70% of the total market cap on the Toronto Stock Exchange. To go into specifics, the Snp Tsx Composite Index is basically a weighted index with the largest constituent accounting for 6.46% weightage. The index constituents together have an average market capitalization of 12.67 billion Canadian dollars. Shopify Inc. has the largest market cap of about 208.56 billion Canadian dollars. The financial sector basically makes for the largest share of the pie at almost 1/3 of the sectoral distribution of the index, followed by energy, materials, industrial, and information technology sectors. When it comes to the smallest sectors, healthcare, consumer staples, and consumer discretionary make up for the smallest in terms of index percentage share. If you look at its recent performance, the index witnessed a few setbacks as it crashed at the beginning of 2020 because of the COVID-19 pandemic. Nonetheless, it has been climbing to new highs since March 2020. The index, in fact, has given a lucrative return of about 34.29% in the last 1 year. So, Samta, the index is basically considered a barometer of the Canadian economy, and it's quite similar to the S&P 500 index, which is in the US.
Thank you so much, Nidhi, for sharing with our listeners the difference between the TSX and TSE today.
Thank you, Samta. It's always a pleasure to be on your show.
Well, to our listeners who want to listen to this podcast again, please log on to our website, that is kalkinemedia.com, or you could also go to our YouTube channel. Do not forget to like, share, subscribe, and hit that bell icon to know about the latest videos and podcasts that are uploaded. Until we see you next with yet another insightful episode of Beyond Just Money, this is me, Samta, saying goodbye, and as we always say, stay apprised and invest wise with Kalkine.
Our listeners are requested to make their own inquiries about any investments, and Kalkine Media strongly suggest that the listeners seek advice from a financial advisor, stockbroker, or other professional as necessary. Kalkine Media hereby disclaims any and all the liabilities to any listener arising from any use of the information shared or discussed in this podcast. This podcast is available for personal and non-commercial use only.